Welcome to Life Planning 101, brought to you by Smart Money Group and Kennedy Financial Services in Eastland, Texas. Tune in every week as we share important information to help you and your family live life on purpose. Insurance, investments, legacy and tax planning, and much more. All covered now on Life Planning 101.
Here we are with another episode of Black and White Market Minute on Life Planning 101. Matt, Ervin, Aaron, Kennedy, and Sam Barker with you today. Talk a little bit about what's going on in the market. And today, as we were sitting around, we kind of want to start with a history lesson, right? Something, usually we get caught up in headlines and get kind of scared by the news. I think that's their job, right, gentlemen, to just scare the crap out of you.
Oh, yeah. You're not supposed to be comfortable.
Yeah, so there's always something to sell with fear, right? And the news is doing it. But top headlines are saying that this pricing right now is relating back to 1999. We all know what happened back then. It was the big scary, right? The .com, yes. Right?
And it's not wrong. You're not wrong. Overall, we're up there. We are super expensive.
Right. But history tells us to look below the surface, right? So when we look at below the surface, the mid and small cap companies are in the bottom quartile for earnings, right? So average P's, I think you were saying, were around 19% or 18 to 19 multiple.
Yeah.
We're looking at 14 and 15 for some of these buying opportunities. So it seems like the smaller we go down, maybe the more opportunity.
The cheaper companies get, the better opportunity.
So let's talk a little bit about the IPO market. The IPO market, they can choose, right? New companies coming to market, they choose the environment for which they go public. So Sam, why don't you tell us a little bit about what's happening in the IPO market right now?
So in the initial public offering market in 2021, it was really hot. Everybody was, a lot of the retail traders had their COVID cash still on hand, and markets were running pretty hot. And then in 2022 and last year, they really dried up. But it's really starting to heat up this year. And
dried up? That's an understatement.
Mm.
I mean, like disappeared.
Yeah.
What was the difference? What was the difference between, 2021 and 2022?
It was really bad. I think in 2020, last year, I think 154 companies went public based on some of the reports we were reading earlier, as opposed to over 1,000 in 2021.
So when
it's a hot market.
Well, so when the cash is flowing, people are wanting to go public because then there's money out there to buy, right?
Yeah. Push up those valuations.
Right. So what's happening now?
I think a lot of people are anticipating some rate cuts, and I think everybody's getting excited. And so
you're starting to see some activity in the IPO market?
Yeah.
They're finally, breathing some life back into that market. And it's so comforting to see. Because no CEO, nobody wants to go to the market and see their stock price plummet. And, on average, that's what happens.
Right.
We have 2-3 great days, and then all the CEOs get out, and we see their eyes drop out.
Right.
But they need it strong, and they're liking what they're seeing. These companies are coming to market. It's very positive. It's fallen right into our beliefs for what this year is going to bring us. Very, very excited about this year. It seems like all the stars are aligning. You were talking about how cheap things are. Small caps, we're in the 10th percentile in small caps.
Oh, wow.
90% of the time, small caps are trading higher than this.
Right.
Why not jump all over that?
Right.
Why not? If you look at the value market, we compare that to the world, 80% of the time, it's priced higher than this. So you pull out those silly 7 stocks and, it looks good. It looks like a great time to get money to work. Maybe not in those top, the super aggressive, maybe not aggressive.
Well, you can't chase the returns, right?
Right. We're going to have a heck of a lot better opportunity outside of the Magnificent Seven than inside.
So this is kind of a thought. They say certain markets are stock picker markets versus like the throw the dart, cover your eyes, grab an index and ride the wave. Are we still in the stock pickers market until that momentum gets in full swing, or what does that kind of look like?
Absolutely. Right now, still lots of fear. in the market. We're still supposed to have a recession. We're still supposed to cut rates, all this stuff. So, it's not the time that you be buying companies that don't have any future.
Right.
There's a time for that. When everything's hot, everything works. But right now, you can find fantastic companies that are kicking out tons of cash, good growth, and trading way, way below market. And you're not going to find, you'll own it if you're in the index, but this is the time to load up on those companies.
Right.
This is the time to specialize in fantastic companies at a below average price.
Right. There's a lot that goes into that. I know we look at so many indicators, but and people have access to that. But the thing that people still do is subject themselves to that fear greed factor, right?
Oh yeah.
Because there's people some people will call us and want to buy this or buy that, and they're usually chasing something, and so we have to kind of help them. So it is a picker's market, but be careful what you're picking.
Yes, that's exactly right. Kind of to go into that, in our momentum model, when things are super beat up, we like to go to value and just looking at the value index. And these are the cheapest companies out there. And it doesn't matter if you're earning or not. It doesn't matter if you're growing your cash or not. It's just the cheapest companies. People are still flooding away from that. So you look at this year, just 2024, that market's down. Where you look at the NASDAQ and it's up almost 7%.
Wow.
So where do you want to be? I love cheap companies, but I want them with some growth. I want them with some cash flow or some free cash flow. And those are the companies that are moving. That's where the wealth is going to be made in this next cycle.
So you got to be able to decipher through and kind of stack your screens, right? Your factor screens. So you want the cheap companies, but solid cash flow, and then slice in the momentum factor as well.
Absolutely. Yeah, just don't go out there and buy the whole index. You pick through the index and find the great companies. Because, probably I can't do any looking forward, but let's pretend that the market does great. Start of 2025, those great companies are not going to be in the value index anymore. They're going to move over to the growth. That's the companies I want that have gone from dirt cheap to, holy cow, this is something.
Well, and you kind of nailed it, right? Because there's companies that are in the value index that should be and will stay there no matter what the market's doing.
Yes.
So that's not a place to just hang out permanently.
No.
Something to roll in and out of, but at the company level. So there's a lot of strategy to this, and people try to navigate it alone. We suggest not to, because there's so much that goes into it, and you're susceptible to all the biases out there. And having a team in place is extremely impactful.
Absolutely. It's hard to get around those human behaviors. You need somebody holding your hand, pulling you back from the edge. Right?
That's what we got saying.
That's what we got saying.
Yeah, that's great. So, gentlemen, is there any last minute things you want to add to our history lesson today?
One thing I know that with the small caps and mid caps being undervalued, and then the large cap and mega caps having a lot of cash on hand and being at least fairly and maybe a little bit overvalued, something to maybe keep an eye on in the small cap and mid cap space is mergers and acquisitions with some of those bigger companies, some cannibalism and things like that. So that might start pushing up those small cap and mid cap indexes up a little bit, and that's what we're kind of looking out for.
Yeah, amen. I'm glad you brought that up. We want to see that, animalistic behavior. Right. When you got these big companies, maybe they can't grow 40, 50% next year. What can they do? They can pick up a company that's growing 20% at 50% off.
Right.
There's their growth right there.
Well, we saw that in the oil and gas industry, right?
Yes,
and you're still seeing some of it. Is there any other industries or sectors of the market that are picking up in M&A?
Not materially. We're seeing it across the news, especially in the healthcare arena. But man, look what happened to healthcare last year. It was negative. So that's ripe for the picking. Yeah. So this is going to get exciting.
Awesome.
It's going to get very exciting.
Awesome. Well, as always, if there's things that you want to know more about or hear more from us about, talk about, we want to hear from you. So we want to take care of you guys and as we get wrapped up today. Everybody just stay safe, have fun, love your family, right?
Yes, what's important.
All right, so if you have anything for us, give us a call, reach out. Love to hear from you. But that wraps up today's episode of Black and White Market Minute on Life Planning 101.
Thank you for joining us for Life Planning 101, brought to you by Smart Money Group and Kennedy Financial Services. If you have questions, you can email them to lifeplanning@kennedy-financial.com. Be sure to tune in next week for more Life Planning 101. The opinions expressed herein are those of the firm and are subject to change without notice. The opinions referenced are as of the date of publication and are subject to change due to changes in the market or economic conditions and may not necessarily come to pass. Any opinions, projections, or forward-looking statements expressed herein are solely those of the author, may differ from the views or opinions expressed by other areas of the firm, and are only for general informational purposes as of the date indicated. Securities offered through Calton & Associates Incorporated, a registered investment advisor, member FINRA SIPC. Investment advisory services offered through Smart Money Group LLC. Kennedy Financial Services and Smart Money Group LLC are separate entities and are not owned or controlled by Calton & Associates Incorporated.